Okay. All right. I appreciate it, David. Again, thanks for having me back. My name is Stephen Cawiezell with the TradersPlan.com. This is me right here. Today, the title of my presentation is going to be how to create weekly income in less than 20 minutes per week. Now, I know that's a big promise, but I'm going to teach you my top performing rules-based approach today. So, by the end of this presentation, you are going to have a rules-based trade plan. So let's go ahead and get started. Real quick, I always like to pay homage to Warren Buffett, right? And he's the man. But here's a quote that he says that really rings true. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. Now, what is he really saying when he means that? Well, he's really saying I like to buy high quality stocks on a pullback. And there was a major shift back in the early 70s. This was actually, I believe, a quote from Charles Munger, his business partner, and convinced Warren, let's buy high quality stocks at a fair price instead of, buying stocks in the gutter that are average companies. So it was really a mind shift, for Warren Buffett. And when he started doing that, he was already doing well. And then he really, did well in the 70s and 80s, and the rest was history. So that's what we're going to do today. We're going to talk about buying high quality stocks on a pullback, what's the right time, and I'm going to give you a very specific rules-based pattern for that. So this is most of the charts, all of the charts we're going to be looking at today are weekly charts, okay? So this is Zoom right here, and we all know what has happened to Zoom over the last couple of years. And this is the 4-bar pattern. It's a 4-bar weekly pattern. This is the pattern we're going to talk about today. Now, at the almost absolute bottom of Zoom, before it absolutely took off, this pattern was printed. Now, I think both you and I know that not every stock is going to go from $50 to 500. Right? There aren't a lot of 10 baggers out there, but we can look at history as a guide to continue to say, okay, what's popping up again and again before these stocks make their big moves. Now, what happens, right? Zoom came out, IPO'd, and there's always a lot of FOMO that kicks in when you have a high quality stock that is just going straight up. Right. So really people buy it without any rules, and then they start buying it on a pullback. Well, you can buy it on this pullback and then it come all the way down to here. And that's a pretty big pullback. So instead of really guessing and getting stopped out several times along the way, we're going to talk about a very specific rules-based approach that takes the guessing out of the equation. That's all we're doing. We're buying high quality stocks on a pullback. So, and this is just another great example, CAR, C-A-R. This is a weekly chart right here. Again, not every stock has to be a Zoom, but you can look at this chart. It's a high quality stock, a nice uptrend, right, for most of 2021, pulled back, and then it really created this reversal bar in the 3 bars before it, and then it just absolutely took off. And now the interesting thing is this chart, you can see right here down in September, this chart was taking off even when the market was correcting in September. So a lot of times, this pattern can really put you on good stocks before they really slingshot the other way, right? Before that trend reversal. So those are the rules we're going to cover today. I've worked with thousands of traders over the years, and I like to talk a little psychology for a second because psychology is incredibly important when you're focusing on a rules-based trade plan. Now, usually traders are in one of 3 stages that I have found. And stage 1 is usually where brand new traders are, right? They're new to trading. They're trying to find themselves what kind of trader they want to be, or they are new to a trading system. Maybe they've been trading a while. They see something that looks good on paper. So, they're starting it out. What happens in stage 1 is usually there's overexcitement. There's excitement, there's confidence, kind of quick to pull the trigger. Now, the downside to that excitement and confidence, a lot of times there are no rules. You see a hot stock on TV or on the chart or whatever, and you don't really have any rhyme or reason. You're just discretionary buying. Okay. Well, it never fails when you don't have rules. Eventually you're going to get hit with a string of losses and you get knocked down a peg or two. Right. So now your system that you were super excited about, or your process or your trading, now you're only semi-confident because reality set in. And I call it kind of, you go on this quest and you feel that anyone who's in this stage, they feel like they say to myself, I'm going to learn everything about the market out there. I'm going to learn every indicator. I'm going to learn every stock, industry, CEO change, whatever the case is. So they go on this information overload, this quest, thinking that it is 100%. They need to know every stock, every indicator out there, every candle bar to be a really good trader. Unfortunately, that's not the case at all. And I've seen traders most traders, when they're early on, they get stuck in this stage for usually a few years. I've seen traders in here get stuck for decades, where they're just on this constant quest for knowledge. Right. Well, when reality sets in and they realize that every candle bar is not going to make them a better trader, then they kind of throw their hands up and they feel stuck, lost, frustrated, saying, I don't really know what to do from here. And I have home run seeker written down here. And that's a very, very dangerous place to be, because I'll get emails every now and then from people that are like, hey, I just lost money on whatever, previous strategy I was trading. Can you just give me a double or a triple to break even? And I usually laugh when I get that, because I'm like, okay, that's not an easy thing to just do on command. And that's a horrible mindset. And that's a horrible place to be if you're just shoving all your money in one stock or taking above average risk to try to get yourself back to break even. All right. So, and I've seen people stay here for a while until the next system or the next strategy or the next level of excitement comes along. And then they start all over again. And the cycle just continues. Right. Well, I mean, the real problem is not, necessarily what system or what candle bar or, what you're doing. What I have seen from traders is the real problem is traders don't follow, or they don't have a objective rules-based trade plan. When I say objective, that means a very, very specific rules-based trade plan. Traders say they have rules. Yes, I'll give it to them, but there's a lot of discretion involved in those rules. And when you enter discretion into a rules-based system, it actually ends up not being a rules-based system at all. We have to treat trading, every business has a marketing plan. They have a business plan written down on paper. Trading is no different. You need to have that set of rules to really help you make a lot of money and help keep you out of trouble as well. So that's what we're going to talk about today. So my big promise to you today is I'm going to teach you an objective rules-based trade plan. I'm going to give you the money management rules on when to get in and when to get out, right? We're going to look at some real life trade examples, and I'm going to have you do this whole system on only 20 minutes per week. This is not for day traders. This is not for people who want to stare at their screen all day. Okay. I like to place my trades, set my stops, set my targets, and go do something else. I don't like to stare at a screen all day, because what I found is the more you stare at a screen, the more you're going to want to tinker with it. The more you're going to want to make mistakes. So, we buy our stock, we place our targets, and then we do something else. Real quick, got to make the lawyers happy. So I'm going to give you a few seconds to read this disclosure. Okay, lawyers are happy. So a little bit about me and why you should listen to me. I am a former financial advisor turned trader publisher, and that was back in 2013 when I really made the switch from asset management. I worked with a practice and another advisor with 60 million assets under management. I'm the author of Expert Trading Systems. That is a book you can purchase on Amazon. The head founder and trader of the TradeOutLoud.com. And honestly, what I'm most proud of is I have helped thousands of traders set up a rules-based system, right? A rules-based trade plan. So what makes this easy? What makes the trading system that I'm about to teach you easy? Well, for one, there's zero fundamental analysis involved, right? You don't need to know CEO, earnings, none of that, sales, like it just doesn't matter. We're only going to focus on price and volume, because the more fundamentals you insert into a rules-based system, the more discretion you usually use. So we're just using price and volume. Very, very easy. All the fundamentals are on the chart anyways. There are only 3 rules that you can literally write it on a Post-it note right here. So I challenge anybody who is sitting at your desk, pull out a sticky pad, and I'm going to give you the rules. You can write it on a note, stick it to your computer screen. That way you can have it. And this only takes 20 minutes per week. This is not designed, again, to be day trading and stare at your positions all day. All right. Staring at your positions is not going to make you more money. So very, very simple, very easy to implement, very easy to trade. This is a once per week setup. Okay. Now, when studying the bottoms in stocks, I noticed that there are certain qualities all stocks have before they turn into winning trades. Now, in order to identify this money-making setup, we have to recognize these qualities before they make their big moves. Now, I have narrowed down these qualities to a rules-based winning systems that I'm about to get into. Let's give this a bird's eye view real quick. So usually what we do is we spend 15 minutes on the weekend going through our scan to find the best setups, okay? On Monday morning, right at the market open, we place our market order. It might take 5 minutes, 20 minutes total, so you rinse and repeat. So 15 minutes top to go through the scanner, 5 minutes to place your order, set your targets, your stop losses, go do something else, right? Go do what you enjoy doing. So this is it. These are the 3 rules that I talked about, and I'm going to show you. This is CrowdStrike. This is an example that we're going to look at. This is a case study, and we're going to look at many other case studies as well. These 3 rules, right? I told you they were easy. I told you could write it on a Post-it note. Now we're going to go through these rules one by one, and I'm going to talk about the rules just so you are crystal clear. And I'm also going to talk about the logic and the psychology behind each rule and why it works so well. So let's start with number 1. Okay, number 1, we're looking at this reversal bar. Now this is a 4-bar pattern, right? But we're looking for this reversal bar. You are usually going to find it at swing low points, at pullback points on the chart, like we looked at Zoom, like we looked at CAR, now like we're looking at CrowdStrike. Okay, so here are the rules. When you get this reversal bar, or when you get a swing low point, the weekly chart, meaning this week, must undercut the prior 3 weeks. Now, what does that mean? That means the low of this bar must be lower than any point of the previous 3 weeks. 1, 2, 3, check. Now, why do I do that? Well, it's really to flush out the weak holders. How many times have you bought on a pullback? Let's say you buy right here, you get stopped out right here, you buy right here, you get stopped out right here. How many times have you bought on a pullback only for your stop to get picked off, right? Only for it to get picked off, and then the bar reverses and goes in the intended direction? Well, I mean, if you've traded enough, it should happen all the times if you're using stop loss, because that's just the nature of the beast. Well, I like to buy what I call after the shakeout, meaning I like to buy after it's already ran stops and then showing a bullish reversal. Get rid of the weak holders, get rid of the retail traders that just have tiny little stops right here, because a lot of times the overall stock or the market can kind of be a magnet to those stop losses. Okay. So the reason why I'm looking to undercut the previous 3 weeks is I'm looking to run out all the stops. And I want there to be, 3 weeks, I want there to be a reasonable enough pullback so I can get that slingshot approach. Now, to be clear, these 3 bars do not have to be in sequential order, meaning this doesn't have to be lower than this, and this doesn't have to be lower than this. It can be, if this were a reversal bar, which it's not, but if this were a reversal bar, it could be below these 3 weeks, 1, 2, 3, right? They're not in order, but the low is lower than all 3. Okay, so they don't have to be in order. The low just has to be lower than any of the previous 3 bars. Very, very simple rule. Okay. Rule number 2, must finish positive on the week and most close above the previous week's close. All right. Very, very simple rules. Now, when I'm looking, we do all these little things to give ourselves the edge, right? Rule number 1, it's a reversal. It undercuts the previous 3 weeks. That means it's a real pullback. It's running stops. That gives us an edge. Rule number 2, I want it to finish positive. I want there to be enough bullishness in the bar to give me confidence that the trade is going to slingshot the other way. Okay. I want the bulls to be in charge. And I'll give you a perfect example. This right here. This is technically a reversal, but it does not fulfill rule number 2, right? It opens right here, it closes right here, but it doesn't close above the previous week's bar. It's not green, and it failed. Okay, so this is a reversal that failed because rule number 2 wasn't fulfilled. Then you get that bullish reversal, right? Rule number 2 is fulfilled, and it worked very, very nicely. Okay, so rule number 2 is very simple. I want the bulls to be in charge. The bulls aren't in charge right here, and the pattern failed. Now, rule number 3, must have above average volume. Okay, now what does that mean? All right, right here, you have above average volume. Now, how I identify as above average is I'm looking for a 50-day moving average. I plot it on a volume histogram, right? Anything above the line is above the average. Anything below the line is below average. there's not a blue line over here because it was a fairly new IPO and there weren't 50 periods to average yet. Okay. But you can clearly see that this is a skyscraper above all these. Now, what's the logic behind above average volume? Well, we have all these little rules to give ourselves the edge. And not only rule number 2, do I want the bulls to be in charge? I want the institutions to be supporting the stock. Now, right here, one of 2 things are happening. When you see this kind of volume and this kind of reversal, one of 2 things are happening. Either one, a couple institutions or the smart money, and I'm talking hedge funds, mutual funds, right? The institutions, they're stepping in and supporting their stock, meaning they don't want the stock to go any lower. That's bullish for us. Or even better, the second thing happens, meaning an institution like a mutual fund just initiated a position. Now, when these institutions initiate a position, it usually takes 3 or 6 months to complete their position. They can't buy it all in one day because they're buying very, very large blocks and they don't want to run up their average cost per share. So they have to start with pilot positions and then build along the way. Now, that's great for retail traders like you and I that can just hop on the bandwagon and get in and out whenever we need to. Okay, we can get in and out with seconds if we need to. They cannot. It takes them at least 3 months to complete their position. So when I see this kind of volume, like, with rule number 1 and rule number 2, you get that slingshot approach. Okay, so you have 1, 2, 3 rules. It just fulfills all the rules and it works really, really well. Okay, so all we're doing is riding the wave of the smart money. Very, very easy. Let's look at some more examples. Now, CrowdStrike was a great example. It was just kind of that classic textbook example. But let's look at some ones that maybe aren't at the absolute bottom, right? Just high quality stocks that are pulling back, right? You have Washington Federal. Maybe you've heard of it. Maybe you haven't. I don't even think I had before it popped up on my scanner. But you got an uptrend and you got a pullback. You got a reversal, right? Undercut the previous 3 weeks and above average volume, green, right? And then it resumed its uptrend, slingshot its way forward. Then you got another pullback. Look, you got another reversal and above average volume. Maybe you just made a little money on this one, but look at this swing low right here. This is the deepest pullback on this whole move, okay? Look what happens right at the bottom, right? You get this weekly reversal pattern. You enter at the open on Monday, maybe you double up, take another position here, and boom. And you can see this pattern pop up again, and again. So I challenge you, anybody, if you have a watch list, throw up some weekly charts, look at any stock on your watch list. I feel pretty confident in saying you're going to see this pattern several times on the stock if you go back if you're on the weekly chart and you go back a couple years. Now, it never fails. Someone always confuses this with the daily chart. This is a weekly pattern, not a daily pattern. Okay. So I just want to be clear about this. You can use it as a daily pattern, but I got to be honest with you, you're going to get so many setups, right? It might be a little overwhelming. Okay. So there's one example. Here's another example, ASML. Again, this isn't like a popular FANG stock or anything, but you got a nice uptrend. You got a pullback. You got a reversal. You got an entry. Continues to go up, right? Probably tell it broke right here. So you had a nice uptrend. And so far, this uptrend right here, this is the deepest pullback of the whole uptrend so far. And it gave you a nice reversal bar right at the absolute bottom. And then it just slingshot forward. So these are the patterns we're looking for. They don't have to be way down in the gutter. As a matter of fact, these are kind of the setups I would prefer because I'm looking to buy high quality stocks, right, that are pulling back within an uptrend. Same thing like this. I'm looking for high quality stocks that are pulling back within an uptrend. That way it can slingshot its way forward. Okay. Now, Royal Dutch Shell isn't something that probably any of us would consider an exciting name. All right. But because it's an oil stock, it's a mega cap. But you know what? Right as the market started breaking down in September, look, it honestly doesn't even look like it's at the swing low point because here's the low of the whole pattern. But it came back up and it tried to break down and then boom, you get a reversal. This low undercut the previous 3 weeks and just started gapping up higher in the middle of a correction. So you had several stocks, including the bank stocks, including the oil stocks that were actually creating reversals and breaking out right before right when the market was trying to break down. So it's just, there's an abundance of opportunities. It really just kind of depends on which industry wants to break out at any given time. Okay. So this pattern is abundant, right? You'll start to notice it again and again if you really pay attention to it and train your eyes. Now, here are the money management rules, and the money management rules are also incredibly simple, but I've put them through the ringer and they work really, really well. Very simple. We're buying at the open on Monday. We're selling half at 8%. Okay. So target one is 8%. So if I'm buying Apple at 100, I'm putting my stop loss at 92. My target one is 108. When I hit my target one at 108, okay, then I'm going to let the rest run until it breaks the 50-day moving average. So you're booking partial profits and you're giving your stock plenty of room to run if it wants to continue to go higher. Okay. Very, very simple, easy to follow money management rules, but it works just incredibly well over a reasonable number of trades. I've been using these money management rules for several years now. I've back tested them against, discretionary and all kinds of different stuff. This is simple. This is replicatable. I like simple and replicatable because they work so well. The average person thinks you need to have all these fancy indicators, wait for the stars to align. And I don't believe that, right? I just focus on price and volume and some set of rules, and then just let the stock do what it's going to do. So can you do this? Can you spend 15 minutes per weekend to find these setups? Now, I'm going to talk about this. I'm going to show you how you can get the scanner, but I'll tell you one place that is really good if you don't have the scanner is earnings gap up scans, right? I love looking through earning scans. That's a good place, nice honey hole to find these, right? 15 minutes. Or can you place a market order before the market opens on Monday? How about set up your automated orders? I talk about, the automated profit booking strategy, right? That I just showed you right here. You can automate this as much as you can. But this is just a snapshot of Charles Schwab Street Smart Edge. And I mean, this just goes to show you, right? You can place an order, you can set your profit target, you can set your stop loss, whatever the stock does in between these two prices doesn't matter. You don't have to stare at it. Staring at it is not going to make the stock move. So you place your order, you buy, you set your automated profit booking orders, voila, go do something else. Go enjoy, what you love for the rest of the week. Go fishing. Okay, don't stare at your position. Now, the great thing about this setup, this reversal setup, is you can easily use them on all major indices as well. So let me show you what I'm talking about. All right, so this is the S&P 500. Now, this is the bear market of last year, of 2020. We all like to forget, but you know what? Look at what happened at the very, very bottom of this bear market. You have a reversal pattern. Now, to be clear, this doesn't need to be higher than this to be a reversal pattern. This just needs to be above average volume. That's it. Doesn't have to be higher than the previous week. But look at that, right? Right at the bottom. You could have bought right at the bottom. You buy at the open on Monday and, the market just slingshotted itself out of here. Right at the bottom. Now check this out. Now there was a bear market in the fourth quarter of 2018. We didn't have a reversal at the bottom in the SPY, but we did have on the QQQ. Look right here. You got a reversal right here at the absolute bottom, right? Buy at the open at the following Monday. Voila, right? You got a nice trend. Now, here is we didn't have a reversal at the absolute bottom in 2009, but we did have a reversal at the absolute bottom in the bear market from 2000, 2003 when the tech bubble popped. Look right here. Look at this reversal bar at the absolute bottom after I think the NASDAQ was down, 70 something percent. Look at what happened at the absolute bottom. You got a reversal bar right there. Now you buy at the open, maybe you get stopped out, but look, you get another reversal right here, right? So as right before the market settles down and takes off again, the more you train the eye to identify this, the more you're going to see it pop up again and again. This pattern is timed the bottom perfectly in all bear markets over the last 20 years, except one, right? Except the 2009. And we had other rules to really get back in that. So it's really absolutely done incredibly well, and anyone can use this. So now this is on the weekly chart. Keep in mind, okay, this is on the weekly chart. right? I just want to be clear. All the charts I'm looking at are the weekly chart. So now here are the Monday morning setups that we've done over the last 2.5 years. 116 Monday morning trades. It's approximately 62% win ratio. Now, on average, the trade can last about 4 weeks, right? You could have about 4 to 8 trades on at a time. And the annualized rate of return over the last 2 calendar years is 42.5%. Versus 25% per year for the S&P 500. So literally 70% more profits versus buy and hold, spending less than 20 minutes per week. I mean, that's the kind of risk reward I'm talking about, right? And this is just, right? There were a couple discretionary trades in here, but for the most part, these are reversal trades, right? Has done very, very well. And we used all the rules that we talked about, right? All the trend following rules, the money management rules to really, really help us get the most out of this pattern. Now, a lot of people ask, like, do you trade options? And, I trade more stocks than options, but absolutely, we have a very, very simple option strategy for these reversal patterns, right? So for example, we're going to book profits on the options much, much quicker. So a lot of times what you can do is you can buy the stock and simultaneously buy a call option. But with the call option, we're looking to book profits much quicker, like 60, 70%, because you have the time decay. And then we're going to let the stock run. So with the CrowdStrike, we actually entered right here. We ended up buying a week late because our first reversal, I believe we bought Amazon, and then we bought CrowdStrike, and then we just started buying the reversals on the way up. We got stopped out right here. So CrowdStrike ran way farther than we possibly anticipated. But, that's why we follow rules. Like, we don't know which stocks are going to be the big winners. We didn't know the NASDAQ was going to have its greatest run in, the middle of a recession since 1999 last year. It did. The NASDAQ had its greatest rally it has had since 1999 in the middle of a recession. That's why we use rules, because I and most people would have never have guessed that. But you follow the rules and you'll be rewarded. Okay. So this is, I don't know where you stand as far as your options account. Okay. So I always say when you're trading with options, you're trading with leverage. So know thyself, know yourself. But if you would have, started with $1,000 and taken one contract per trade, this is where you would have ended up, right? Since 2019. Or if you would have started with a $5,000 account and took 5 contracts every trade, this is where you would have ended up. So you can see the options have done incredibly, incredibly well. But I always say, know thyself when it comes to options, right? Don't put your whole account in options because that's leverage. But it's a nice compliment. It really is a nice compliment. You've heard me talk about rules-based systems, and I feel so passionate about it because I know rules-based systems, they take the emotion out of trading. They're designed to give you more freedom. Okay. When I talk about like place your trades and go fishing, go golfing, go do something else, that's what I mean. I don't like to stare at a screen all day. I don't have to, because I have my systems and my rules that tell me what stocks to buy, and then I can go on with the rest of my day. Now, rules-based systems are, the smart money uses them because they work. Now, I read the other day something like 75 or 80% of all volume on the New York Stock Exchange is automated trading systems. Think about that for a second. If way more than half, a solid majority of all volume on the New York Stock Exchange is automated trading systems, why do they do that? They do that because they work. They do that because to take the human error element, right? These are the institutions are taking the human error element out of the equation. And that's incredibly important because we as humans, we're emotional creatures and we make mistakes. Okay. Now, keep drawdowns limited. This is very, very important to me. I am not of retirement age. I think you saw that from the picture, but I do not like drawdowns. I would consider myself a conservative trader. So I think it's very important. We have worked so hard for what we have our entire life. Right? There's no sense that we need to sit through another 2008 or another 2020 type scenario, right? We want to protect our downside. So we have rules and risk management to really help do that, right? Keep the drawdowns limited and live to fight another day. Now, rules-based systems allow trading to be a money-making business and not a hobby. Now, I want to talk about that for a second. It's incredibly important that you take your hobby hat off and put your business hat on. it's going to be very hard for you to stick to a set of rules if you still get excited, right? You have that euphoria every time you hit the buy button. Right? Because when that happens, you're feeling a different need. I think everybody needs to have a trade plan, right? And then you just execute it, right? Businesses have business plans, right? Everybody from McDonald's to your small business locally, they all have a written set of rules of what they can do, right? What they can spend. We should too. And I think that is where a lot of people really, really lack, is just having that set of rules that can hold you accountable. And rules are meant to change. They can most certainly change over time as we evolve as traders, but I believe you need to have a set of rules to really keep you grounded, right? And make sure that you understand that this is a business. This is about making money. I'm not doing this for a hobby. Okay. So you can really tell my passions with rules-based systems. Now, testimonials, here's just a couple testimonials from some people we worked with. Scott said he sold half at 8%. He's talking about the stock and have been rolling the remaining ever since. Currently up 198% on a closed position, 220% on the open position, tremendous trade. So he traded the stock and the options. Now, down here, you have Richard that said he dropped 20K on a weekly reversal for Sportsman Warehouse. It popped 44%, sold it all for crazy gain in 2 days. Love the reversal strategy, 91.1% on all trades to date since I started 3 months ago, 40 trades or so. I mean, he is absolutely killing it. So the reversal strategy works, and it works because we are slingshotting ourselves forward, right? We're waiting instead of getting caught in the hype and the FOMO, and we're following a set of rules that when we see something in a stock, doesn't have to be the most popular stock we know, but when we see something in a stock, you know, we are the house. We have the odds in our favor. So if you want to come and work with me and you want me to help do some of the heavy lifting for you, I've already taught you the rules. I gave you the money management rules. I told you where you could find the stocks. I told you how to see the stocks, how to look for the stocks. I gave you absolutely everything you need. I have some more advanced videos and some more advanced courses. There's only so much I can fit in an hour-long video. So here's what I got for you. I have the complete weekly income system. Now, as we talked about, the system is really, really easy to implement. You know, if you've taken every trade over the last several years, you average about $422 a week, depending on your account balance. And I love it because it's simple. It's easy to execute and it's simple. And the average trader can do this. The average trader can replicate this. And that's incredibly important when we're trying to help people really get the most out of what they worked so hard for their whole life, right? Pull income out of the market. So I'm going to give you the complete weekly income system as well as with the alerts. So, you know, I want to teach you how to fish. I want to show you exactly what honey hole, what pond, right? What lure, what depth, everything, right? I want you to get the same trades as me. But while you're learning how to do that, I think it's incredibly important that I send you the alerts as well. And I send these alerts before the market opens on Monday with very specific targets and stop losses. This is a very, very simple example. I have a lot more detailed, but for example, you know, enter DraftKings at the market open 50, right? With an estimated target where we're going to sell half and the stop loss of 45. So, you know, the emails are very specific. They have charts in them, but I think that it's important that while you're learning, as it'll take you a few weeks to get up to speed, so you can really do this by yourself on a weekly basis, that I send you the alerts as well. Now, you know, how would you have done over the last several years? Again, I don't know if you trade options and I don't know your account size. So I'll just give a couple of examples, right? If you would have, the blue is the stocks, the yellow is the options, and the green is if you do them both, right? Some people only like options, some people only like stocks, some people only like both. But if you would have put 10,000 per trade in every trade over the last couple of years, this is what you would have pulled out of the market on average on a weekly basis. Now that is an average, right? Some weeks are more, some weeks are less. And if you would have started an options account with 5,000, that's what you would have pulled out per weekly. So you get the 422 both. So again, I don't know where you're at if you like options, stocks, or both. I tend to like both, but I think it's very, very, very important for me to really put that trade plan in front of you and give you all the rules and all the information you need and help coach and guide you along the way. That way you can do what's best for you. Now, as a bonus, I'm going to throw in my Tech Trend Trader system. So you have the weekly income system that is a once per week setup, right? Very, very simple. The Tech Trend Trader is a pure market timing system, right? I'm going to repeat that. It is a pure market timing system, right? It is just going to tell you when to get in the market and when to get out on the market based on the NASDAQ. Okay. So we trade the QQQs or, you know, the leverage ETFs, but I have actually been trading this system longer than any other system out there that I currently have. I've been trading this since 2015, and it just continues to work very, very well. So not only will I give you all the rules to this system, right? It's 3 simple rules, kind of a lot like the weekly income system, even though it's different. It's very, very simple, right? I walk through, all the rules so you can do this yourself. But in addition, while you're learning, I'm going to give you the real-time alerts as well. That way you are crystal clear. Are we on a buy signal or are we on a sell signal? This is all just a market timing system, but it is done very, very well. And to show you, I'm going to show you the performance of what it's done every year going back to 2006. I like to include as much data as I can so we can see multiple market types, including 2008. We have a bear market filter. But so far, this system going back to 2006, this right here has not had a down year. Now, this is the 2X version, right? To be crystal clear, you can trade the 1X version, the QQQ, the 2X, or the 3X. I'm more of a 2X guy, but that's really up to you. As I always say, if you're going to use leverage, know thyself. But you can see right here, this is what it's done every single month, every single calendar year, going all the way back to 2006. Right. Our worst year was 2008 when we were completely in cash. The system didn't take any trades because we had a bear market filter. Now, given the market got hit 55% from peak to trough in the bottom of 2009, I think most people would take that. Right. Again, we are winning by not losing. We are protecting, right? We believe that drawdowns matter. So I don't want to sit through anything like that. Just FYI, if you would have taken every trade going back to 2006, this is, start 100,000, just simple math, started with 100,000. All right, buy and hold the SPY, which is the S&P 500 ETF. All right, your 100,000 would be worth 480,000. Now that's not bad. I'm not complaining about that, but you would have sat through a 55% drawdown. That sucks. And so instead of those major drawdowns, this system is going to be sitting in cash during drawdowns, flatline, 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 which allows you to not have to play catch up from the bottom. Okay. And then when you get a buy signal, you're back in. So you can see right here, 331% more money versus buy and hold. That's what it's done since 2006. And again, this is a 2X version. You could go with a 1X, you could go with 3X. That's really more of a personal decision, but it is a pure market timing system. This is just a testimonial. The tech trend trader, Greg said, first trade paid for his subscription. Jeff was pretty pumped. He was in the TQQQ. That's what I want, right? I want the first trade to pay for your subscription, and then you're good to go. So a couple of very happy customers. So let me kind of recap everything you're going to get. The weekly income system, number 1, which I taught you today. There's a little bit more advanced stuff, plus alerts. The tech trend trader system, number 2, plus alerts. So you get these systems complement each other nicely, right? In addition, every single Tuesday morning, I put out my top swing trade setups of the week. So it's usually my top 5 picks with very specific entries and targets and stop loss. So maybe you like to put more money to work. I put this out every Tuesday morning. I usually put out these lists on more aggressive stocks, right? Like Riot, this is a snapshot that I sent out before it broke out last year. A beautiful couple candle pattern with the potential buy above $4. It broke out the following day, and we made a lot of money. No, I didn't know it was going to go from $4 to $76, right? And yes, this is a perfect example, right? This is what we all strive for. But these are the kinds of aggressive stocks that I put out when I'm looking at I'm looking at stuff that's very, very fast moving. This is another TKAT, right? This is a stock pulled back to the 50-day moving average support. We bought, it was up a lot, maybe about 50% within about 5 days. So, again, we're looking for these aggressive names a little bit, but I put this list out every Tuesday. And, if you trade options, we actually do have a new option income alert service. You can currently buy it separately, but I am offering this absolutely free. It has, I have an options trader in-house. We do a lot of credit spreads, but we do some calls and puts too. So for the first 20 members, if this is important to you and this is something you want to join, I'm going to throw in the option income alerts for free. So kind of recap everything. System number 1, plus alerts. System number 2, plus alerts. The Tuesday morning top 5 swing trade setups blueprint, option income alerts. In addition, I do give out scan codes. So I have scan codes for the weekly income system, right? That makes it very, very easy. I have scan codes for stock charts and I have scan codes for Thinkorswim. That way you can wake up Monday morning, press a button, and have quite a bit of options in front of you to choose from on the weekly reversal pattern. Okay, so I have scan codes for these platforms. And you can always, if you use another platform, you can always take the scan code and really kind of replicate it on whatever platform. So, and to be clear, this is a weekly pattern. Now, this scan code, you can turn it into a daily scan code very, very easy. Very easy. So you can turn it into a daily scan code. You can probably even turn it into 60-minute. The pattern has universal application. But I'm going to tell you, even if you only go on the weekly scanner, which is what I do, there are still usually at least 10 patterns per week. So you have plenty of stocks to choose from. And I show you how to narrow them down and rank them and select the best one on a very, very specific rules-based approach. So this is just a snapshot of stock charts. Plenty of weekly opportunities. And by the way, if you don't have stock charts, you can always take a free 30-day trial, see if you like it. And then if you do really like it and you don't want to continue to pay, you can move the scan code over to your brokerage platform. Okay. Now, as a bonus, I love to put together these workshops. I've launched the Fast Track Weekly Income Workshop in January. I've hosted 7 so far this year, and it has just received phenomenal feedback. Now, the goal of this is to really teach the weekly income course in the live version, because I've noticed that a lot of times when people just need a little bit of extra help, they need that live setting, they need that hand holding. So what I'm going to do is I throw in this workshop. I don't have a date scheduled. It is definitely going to be in December since we're approaching Thanksgiving. But it'll be a 2-day live workshop, and it's going to be a small group. And the goal is to go from newbie to mastery in 30 days in this weekly income system. Now, I do have one special. As long as you're a member, you can attend as many of these. I usually put them on about once a month, maybe once every 4 to 6 weeks. As long as you're a member, you can continue to attend as many of these workshops as you want to for life, as long as you're a member. So let's say you need a refresher course a couple months or even years down the road. You want to attend the next workshop. I allow unlimited attendances for life for free as long as you're a member. So you can attend as many as you want. So kind of recap everything. You get the systems, everything we talked about, plus the scan code and the workshop. But I think what's important is you get one easy to follow trade plan, right? You get option income alerts, weekly income system, market timing system, the tech trend trader. And I don't know how your trade plan will look, maybe you like this more than this, maybe you like this more than this. You can kind of cut up the pie however you want to, but you really have, several options to choose from and how to build your rules-based trade plan. And I think that's incredibly important. Now, if all this did was give you an additional $422 per week, would that be worth it? How about finance a few trips on your bucket list, right? I like to travel. I'm actually going to Hawaii in a few weeks, right? I love to travel with my wife and kids. What if it just allows you to retire more comfortably than you and your family thought possible? Would that be worth it? Okay. Everything we talked about, you get the complete weekly income system for $997. You can go to plan, you get all the systems, all the workshops, the entire list. You can go to https://plan.thetradersplan.com/checkout-NTS. So that's plan.thetradersplan.com/checkout-NTS. I'll drop that in the box here in a second. Now, that is a 1-year subscription, but I wanted to do something special, and I know there's a lot of uncertainty out there in the market. So I'm going to offer a buy 1 year, get 1 year free. So not only will the $997 cover you for the next 12 months, it's going to cover you for the next 24 months. That is plenty of time for you to really, really dive deep in the system, really, really dive deep in the scan codes. That way you can really learn how to do this. Now, I understand, I like to put my money where my mouth is. So here's my 2-part guarantee. Trade it for 30 days. And if it's not for you, just send me an email and request a full refund within the 30 days. But you have to prove you've taken at least one trade, right? I want to see that you at least tried. But if you tried and it's not for you, just shoot me an email and you get a full refund within 30 days. But I know most people don't want their money back, right? They want a mentor, right? They want to be successful. So here is my second part. If you haven't made $3,000 or tripled your subscription investment in 90 days, I will personally mentor you until you do one-on-one. So we'll hop on Zoom, we'll share screens, I'll look at your trade log, I'll look at everything you're doing. That way I can really set you on the right path to be successful, right? And I like that because I know that, if you're not where you need to be, I want to work with you and I want to help you get there. So this is absolutely everything that's included. https://plan.thetradersplan.com. I dropped it in the checkout. So I got a couple questions and I'm going to go ahead and answer them. Does a stock charts scan code require a stock charts membership? Yes, it does, but you can also, so you can take like the pro version. There might even, which is $24.95 a month, 30 days free. I actually think there is a even cheaper version of like $19.99 per month. But honestly, what you also have, if you have Thinkorswim, you don't need that. I have a lot of people that what they do is they take the free trial with stock charts. And if they really, really like it, then they take that scan code and move it to whatever brokerage platform that they like, right? They just kind of customize the code, which is totally fine. But sometimes it's easier to learn on stock charts, but maybe you just want to take the code and, add it to your brokerage platform. So that's completely up to you. All right, but you can at least try it for 30 days and see if you absolutely like it, right? They have that option for you. Does this work in reverse at the top for all turn sell? So, all right, that's a good question. And that's actually a very common question I get all the time. I have never tested it because I'm a bull and we're in a super cycle bull market. I've never personally tested it, right? But I feel confident you could flip it, right? That way you can, short the inverse if you could just flip the code upside down. You can adjust that where you can do that. However, I got to be honest with you. We're in a bull market and I think it pays to be a bull, right? I believe most shorting systems might make you a little money, but they're probably not actually, the juice probably isn't worth the squeeze as long as we're in a bull market. So probably not something I personally would do. I feel it will work, but I cannot confirm that. You'd have to test that yourself. Okay, so that's a common question. Like, can I use this in short? The scan code, you can also easily edit it to a daily scan code, right? Or I believe you can even edit it to a 60-minute. I'd probably have to double check before I can confirm that. But the scan code has the pattern has universal application, so you can take this pattern and use it on whatever time frame or whatever chart you want. The only thing I'll say is I like the weekly. I would advise on the weekly because even the weekly scan code will give you so many stocks to trade. If you go shorter time frame, then you'll probably have too many, right? Because the pattern it's honestly abundant. It really is. Any other questions? Okay. David, I don't have any other questions. I think I started early and I also finished early. So I think we're good to go, man.